Good morning, investors and traders. In yesterday's analysis, we talked about rising gold prices, and today we are primarily going to focus on gold price near their record high. It's a further build up on our segment that we did yesterday. If you haven't seen that, highly recommend you to subscribe to our YouTube channel where we put our daily analysis. Before we begin anything else, it is important for me to go through this risk warnings and disclosures, which are right in front of you. If you have any questions, please feel free to get in touch with your own account managers. A bit about myself: I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst for Evertrade. Now, we're going to begin the conversation by looking at the weekly chart. Why the weekly chart? Because this is something that we were referring to yesterday. We talked about the gold prices reaching their all-time high. Now, obviously, this is your monthly chart, but on the weekly chart, we were very much focused on this particular candle, the high of this candle, and then the open of this candle. And we were talking about the gold prices reaching that 2049, where the prices are trading today, that as a resistance point. We didn't really actually factor in the high of the previous candle, which was the all-time high of 2075, because it wasn't really expected for the price to pierce through this particular level that it did yesterday and reach the all-time high. But here we are. The prices are near their all-time high. The prices have actually gone very deep into that territory because the all-time high is at 2075, and the high as of today was, or as of this month that we have seen, is 2070, which was formed today. So only $5 shy of reaching that all-time high before the price started to retrace. Now, something that we've talked about yesterday, something that we are going to emphasize today, is the fact that the price is piercing the upper line of the Bollinger Band on the monthly time frame, as you can see it over here. And then we know that the last time the price pierced by the same margin or close enough to that margin was back over here in May 2020 at the peak of COVID crisis. And then now we are seeing something very similar where there are recession fears have stoked, stagflation in fears they've also stoked. So we have a lot of uncertainty in the market, which is pushing traders towards their safe haven asset, and that is your gold, which is push, and hence we're seeing this momentum in the price. So even on the weekly time frame, we see the price extending its move outside of its Bollinger Band, like over here. Again, something that we saw back in May 2020, and this makes us believe that any upside for the gold price is quite risky move, really, because prices are bound to retrace towards the normality level, and that normality is its 20-week simple moving average, which is your green line over here. Let me just kind of zoom into this one to show you that particular element. So to show you that, so it is that this particular green line over here, this is your 20-week moving average, this is your 50-week moving average, your 100-week moving average, and then after that, you have your 200-week moving average. This is the lower line of the Bollinger Band. This is the upper line of the Bollinger Band. And this is the piercing. The last time the piercing happened was here. And after that, we did see the price retracing towards its 20-week moving average as pointed by the arrow. And in fact, from there onwards, the price actually continued its journey to the downside. Not saying that the momentum can follow the same price pattern, but it is highly likely that the prices where they are right now at the current levels over here we are likely to see the price retracing towards here, towards this 50-day simple moving average, somewhere around there. Hence, this particular price level of 1928 to 1911 is quite an important price level, or at least what we wanted to see, the current retracement really in terms of the price action is pushing the prices back towards that 1988 sort of a price level, something that is very, very likely to happen in terms of the price action of gold prices. Now, if we zoom out of the current price action, focus on the daily time frame on, and then what we see over here is again that particular factor, that alarming sign that any upward trade, any upside move in gold prices remain highly risky, because the price has been very much in a parabolic sort of a price action, and retracement is very much due. Retracement is very, very likely to happen. So where are those important price sort of a support levels? So the first one is where we are. After that, or the next support level that we need to focus on is really sort of that 1973 to all the way to 19 sort of 88, I would say 1991. So this is your support level number one. This is your support level number two. These are the price levels where it would make much more sense for traders to get back into the trade, rather than jumping onto the wagon now and then trying to catch the last move of the current price extension, because the current price extension seems to me, according to the price analysis, according to the price indicators, that it is in its last move. Because look where the RSI is trading. The RSI is screaming out that the prices are overbought, and whenever the price is overbought, like it was over here, prices are bound to fall from those price perspective. From the RSI is also bound to retrace from these particular levels. That's all for now. See you guys next time.